Okay, independent living students, welcome to the Taxes and Insurance presentation lecture. We'll be taking the next number of minutes to kind of go through and introduce taxes as well as insurance and the impact that they have on us as consumers, as citizens, when we go through our daily life. Taxes are something that we have to pay, and insurance is definitely a way that we can help protect ourselves and our assets from financial loss. Okay, so let's go ahead and get started. We'll begin with taxes. So why do we pay taxes as individuals? Believe it or not, taxes are mandatory fees imposed by the government or other organizations. Now, they don't just go to the government so they can have a spending spree and use our tax-paying dollars for recreational spending. There are things that we pay that our taxes cover that we as citizens are able to take advantage of. So what do our taxes pay for? Education, public schools. Our taxes go for cost funding for public schools. Healthcare, the ability to have healthcare and be able to go to the doctor or go to the emergency room and get treatment for injuries or any other medical conditions. Military, in order to defend our nation, some of our taxes will go to funding the military as well as the individuals who are in the military. Infrastructure, roads, bridges, things of that nature. When we have road construction, paid for with tax dollars. Bridges being rebuilt, paid with tax dollars. Police and fire departments. So in order to be able to have these types of safety programs in place, our taxes have to fund these programs so that we do have safety concerns being met when it comes to our communities. Libraries. Be able to go in and explore the library, check out books, read books, obtain information through a number of different library resources. Our taxes pay for these libraries as well as the upkeep of those buildings. There are also different kinds of taxes that we have to pay. We pay many kinds of taxes depending upon where we live and what we do. So some of these taxes are based off of our income. Everybody has to pay income tax, not just to the federal government, but also to the state government. There's property taxes. If we own a property, you pay taxes on that property, and funds go from those taxes will go to the state and local municipality governments. Sales tax. Every time we purchase something, if it is not something of need, such as food, it is taxed and based off of a sales tax rate, which is imposed by each particular county. I believe, if I am correct, the Winnebago County it's either 5 or 5.5%. I'm not sure off the top of my head. But any type of purchase that is made, say for clothing or anything of that nature, is going to require us to pay a sales tax. Inheritance. If money is left to us by a loved one, a parent or an aunt or an uncle, grandma or grandpa, we have to pay tax on that inherited amount of money. Estate tax. Estate is a dwelling, someone's estate, the number of assets that were accumulated over the course of a lifespan. And there's also much more kinds of taxes that we have to pay for particular situations. Now, when it comes to how we pay these taxes, we get taxed on our paychecks. So there are a number of different tax deductions that are taken out of our paychecks by our employers. Our employers will hold our tax contributions on our behalf and then pay them. So we have federal income tax and then state and local income tax, as well as FICA taxes. Now, FICA taxes are the Federal Insurance Contributions Act, and they include taxes for Social Security funds as well as Medicare funds. Social Security funds will help fund a lot of our retirement and our cost of living after we are done working, and Medicare will help cover our healthcare needs after we retire. So when it comes to taxes, they are taken out based off of our declaration as an employee. Each employee is going to have to fill out a W-4 form with your new employer. The W-4 form is used to determine how much taxes will be taken out. This is where you tell your employer whether you are applying single or jointly and how many dependents you have, which is going to dictate how much tax dollars get pulled out of your check on a weekly, monthly basis. How do we file our tax returns? At the end of each at the end of each calendar year, which would be December 31st, we have until April 15th of the following year to file our tax returns. we have to do this to determine whether or not we have paid enough income tax or enough tax to the government for the particular calendar year. After we file our tax return, we find out if we did not pay enough, which means that we would owe more into either the federal and or state governments, or if we have paid too much, in which case we would receive a tax refund from either state or federal governments. Now, we file our taxes by filling out a couple of forms. First of all, for our state taxes in Wisconsin, there's a form called Form 1. You can go ahead and click on these links to view them. We will be referencing them and practicing and looking at these in class as well. And then there's also federal tax forms. Most common ones used by a lot of individuals is either the 1040 or the 1040EZ. And we will be taking a look at these more in depth in class to determine the difference between the two and knowing which one would apply best to your tax situation when filing your tax returns. Now, how can we maximize our returns? We can maximize our returns by taking advantage of any deductions that we might qualify for. These deductions come from property taxes, so taxes that we pay on our property can be deducted from our federal income. There's also mortgage interest. So if we own a home and we are paying interest on that home from our mortgage loan, that is deductible. Charitable donations, giving to Goodwill, giving to the United Way, giving to any of those other charitable donations can be deducted on your tax forms. Job-related costs such as training, equipment, etc. So if you are doing anything in regarding to your place of employment, any of those costs can be tax deductible. Education. If you take out loans and pay interest on loans to pay for your education, institution of a higher learning, that is tax deductible. Childcare. If you have children who are in daycare for particular portions of the day or all day, that can be deducted from your income with your tax returns. And investment interest. If you have IRAs, TSAs, any type of investment that you have where you are saving for retirement, the interest of those can be tax deductible as well. Okay, so that concludes the taxes portion. Let's go ahead and move into insurance. So what is insurance and why do I need it? Hey, knowledge is power. Basically, what we need to understand is insurance and how it works. Insurance is it's a security blanket for us to feel comfortable and feel like we are protected in the case of an accident or an unfortunate act which could cause financial loss. So insurance is a contract between an individual, which is the policyholder, and a company, which is the insurer, to help cover unexpected expenses. Now, these unexpected expenses can fall into a number of different categories. But before we actually get into that, let's take a look a little bit deeper into the two different parties. The insurer agrees to pay a certain amount when the policyholder files a claim to cover expenses caused by a particular loss. So that what we call that is a deductible. Well, I shouldn't say a deductible, but we pay the insurer for the coverage, basically is what happens. The deductible is another way that that payment is received and also charged to the insurer. And we'll get to that in a little bit. All right, so how does insurance work? You pay a premium for the service, and when something happens, you inform the company of the cost, and they decide how much they will cover. This is based off of your policy terms, the amount of policy that you have, the amount of coverage that you have. All of these are going to be dependent upon the type of policy that you have. If you have a specific policy, certain things may be covered, other things may not. But it's the claim that's going to determine from the insurance company what is covered and what is not. So what does the policy say? When you get your policy, it will explain a number of things. It'll explain the premium, how much you have to pay for the coverage. It'll include the deductible, which is how much you pay out of pocket before the insurance company picks up the rest of the expense. The kind of coverages that you have and the dollar amounts assigned to different elements of that coverage, the limitations, which is what the insurance policy will not cover, which will also help you determine what type of claim or when to file a claim and when not to file a claim. All right, when it comes to premium, this is how much we pay in order to have coverage. This is covered usually in a monthly payment, which is paid to the insurance company. Sometimes it's paid biannually, which is every 6 months or even every 3 months. Premiums can vary depending upon the different type of policy and the different type of insurance company who is carrying the policy. Now, how much you have to pay first before the company will pay the expenses, that's the deductible. Usually higher deductibles mean lower premiums, but not always. So if you're willing to take on more of the responsibility yourself, the premium will go down. Coverages tells exactly what will be covered and what will not be covered and how much will be covered. Make sure that you read your entire policy. Read the fine print. Know what's covered, know what is not covered. Again, same thing with limitations. Companies will determine how much they will pay and how much they will not pay towards certain types of loss. Will this policy cover this type of loss? Will it not? Once again, read the fine print. Different types of insurance. There's health insurance, which we use to help cover our health and medical expenses, usually covered through our employer. Life, very similar as well in the cost of death with debt and cost of funeral expenses. Life insurance covers this, sometimes covered by your employer, sometimes not. Dental, which sometimes falls under your health insurance policy with your employer as well to cover all dental needs. Auto insurance, which is probably the one that's going to be most important to a lot of you, as either you are already currently driving or will be very shortly. Travel insurance to help cover different assets when you are traveling on vacation. Pet insurance to help cover the cost of your pet, vet bills, surgeries, things of that nature. Liability insurance, which covers the other individual in case you are at fault for the financial loss of somebody else. There's business insurance to help cover businesses, not just on a personal level, but also on a larger level. There's homeowners insurance for those of you who own homes. If you are a homeowner, you have to carry this in order to get a mortgage. There's renters insurance for those of you who wish to rent, help covering the assets in case of some type of an accident that would take place at your place of residence that you are renting. And there's also unemployment insurance. So in the unfortunate act that you become unemployed, you could be insured for some of those losses. Now let's take a look specifically for teens, especially automobile. So how does automobile insurance work? Here is a short video that I would recommend that you watch. We will be referencing this in class with some of our guided practice and independent practice activities. So make sure that you watch it and preview it. All right, renter's insurance covers your belongings in your place of residence, furniture, clothes, appliances, etc. The landlord's policy does not cover your stuff. The landlord's policy will cover the landlord's losses, not yours. That's why the renter's insurance policy is so important. Renter's insurance is not very expensive. It's actually very inexpensive, generally $15 to $30 per month in order to have coverage on your assets when you are renting. Health insurance covers illness, injuries, and conditions, can be covered by your employer or purchased individually, normally covered by your employer, but once you are retired, maybe you may have to purchase some on your own. Now, why? Why do we want to be insured? Because accidents and health problems cannot be planned for, and they will happen, and sometimes when they do happen, we do not have the financial resources to make things right after the accident or loss has happened. So the insurance companies help provide us with security to make sure that everything is covered. Accidents and health problems can't be planned, obviously, as well. So we want to make sure that we are covered in case of loss. Now, things that we need to know, health insurance works very differently. There's premiums, there's deductibles, and there's co-insurance, which is the percentage that an individual will pay after the deductible before the insurance company will pick up the rest. Then there's also co-pays, which is the amount that we would have to pay as a policyholder before our deductible would kick in, which would also then be before the insurance company would start covering some of those costs. Now, health insurance can be provided by an employer, can be purchased individually, also can be provided through state programs such as Badger Care. Privately purchased also is another way to get your health insurance needs covered. And that concludes the insurance portion of the presentation lecture. Please make sure that you review the entire presentation lecture. Make sure that you answer the embedded questions, and also make sure that you review any videos that are included and links in the presentation lecture, as we will be revisiting them in class with guided practice and independent practice activities. I will see you next time we meet in class.